Your Excellencies, ladies and gentlemen, welcome to the Gulf Research Meeting 2017. It is truly an honor to welcome you all here. My name is Oscar Ziemilis. I am the Director of Cooperation at the Gulf Research Center and also the Interim Director of the Gulf Research Center, Cambridge. This is the 8th Gulf Research Meeting. We have a very good group gathered here today, and I think this reflects the fact that there is much interest in the Gulf region and in the new developments taking place within this region. The Gulf Research Meeting has a big function to fulfill, and its contribution to a better understanding of the Gulf region, I think, is quite significant. This contribution would be impossible without the generous support of our donors. And I would like to thank each and every one of them individually. We have, and you'll see them here on the backdrop, Asyad Holding Group, the Arab Center for Research and Policy Studies, Bahamdan, the Cooperation Council for the Arab States of the Gulf, Dedasat, the Bahrain Center for Strategic International and Energy Studies, Jabal Omar Development Company, and Knowledge Corporation. Thank you to each and every one. Without the support of these organizations, this meeting would be impossible. I think in a time when the world is often seen to be pushing people apart, it's beautiful to have a meeting like this that brings people together in a positive and creative way, and I thank you once again all for coming together in this way, in this positive and creative way. It is now my pleasure to introduce Dr. Abdulaziz Zagir, who's the founder and chairman of the Gulf Research Center, to deliver his opening remarks. Please.
Assalamu alaikum. Good evening, ladies and gentlemen. Normally I prepare 16 pages speech, but today I decide even 1.5 page, but I'll turn it and put it in my pocket. So then I'll speak my mind, I'll speak my heart to you today. First, let me welcome you all and say thank you for coming. Thank you for my team at the Gulf Research Center who support me to make sure that such an event is successful. And this is the 8 years, by the way, for those whom they are attending it for the first time. We have close to 2,500 people have attended the Gulf Research Meeting. Approximately 1,600 research paper referee have been submitted, and we have it on the website. Close to 50 books already we have published out of this Gulf Research Meeting at Cambridge University. I would like to thank all those contributors, all those researchers, all those whom they came a long way, far away from home, dedicated to the research and studies of the Gulf, contributing their time and effort. There are many friends in this hall that they do make sure to come every year because they believe on this important academic meeting. They find it quite interesting. Some years they present papers, and some years they are the moderator or they are the chair of the workshops. A few years ago, we have reached 600 participants. And then I said, that's a lot because Cambridge, we don't have a hall that can take 600 people. So we try to reduce the number and focus on the quality and the number of the workshop. This year, it's 9 workshops, but at least there is 230 people participants. Some of them, they will arrive tonight, and you will see them tomorrow. There is a quality work coming out of these research papers, and they focus a lot on the Gulf studies. And I'm very glad to see many students of master and PhD, they refer back to the Gulf Research Meeting, and they refer back to the books published at the Gulf Research Meeting. So I would like to thank you first for coming. I'd like to thank all those researchers and the contributors. I would like to thank all the moderators and all the chair of the workshop. One of them, my dear Professor Tim Niblick, and my dear good professor also, Professor Giacomo Luciani, whom they have believed in this idea from day one, and they have never hesitated to contribute their time and their effort. My friends from the Cambridge University, and I can see Professor Jeffrey Edward and Ambassador Stewart Lane and Professor Yasser Suleiman. They've all given us a good support at this university. The university and the faculties and the people of Cambridge have always welcomed us and really made sure to support us and to give us all their support. So thank you for everybody, and thank you for all the contributors whom they have participated to share with us the cost of such an important academic meeting. The second issue I'd like to speak about it. In life, you may have a sad day. And for me, this year, my sad day was 5th of June, when I waked up in the morning seeing that there was a resolution by 3 countries in the GCC decide to cut relation with Qatar. I'm not here to argue or to explain or to say why that have happened or what should have happened. I understand government have their own interest, and they base their decision in their own interest. But at the same time, I felt like I'm losing something very dear to my heart. I myself have believed a lot in the Gulf unity. I believed, in fact, in the year 2000 when I founded the Gulf Research Center, it's recorded in one of our documentary films about the GRC. I say if the GCC was created because of political and security reason, it is the right of its own people to keep it and not to lose it. And I myself have always believed in that and worked very hard, contributed from my side whatever resources I can put and whatever time and effort, whoever I can encourage, whatever political lobbying I can do amongst all the 6 GCC countries. I've always looked at them as the same, and I've always respected my friend from every GCC country the same, and I gave him the same respect I will give it to all my Saudi colleagues. But it was a sad day for me, and I really hope deep down inside me, I don't want to see that we lose this 40 years of effort to bring the 6 countries together. I wish, and I'm sure, we have a great leadership in the region, that they will overcome that, and they will deal with the issue. And I really hope, truly inside me, to see that over, and we see the relation back to normality between the countries. But by the way, even if there is a difference between governments, between the people, we have no difference. I have my friends here from Qatar, from Bahrain, from Kuwait, from Oman. We are all here in this room. And we all believe on the same cause that I believed in it. And for them to support, to continue, to come, to attend, that shows all the commitment we have. So as far as we, the people from the Gulf, we still have the same belief. Government, they will settle between them, and they will come up with decision, and hopefully that will be soon and not late. The third point I want to mention is regarding this panel discussion. It's great to have a dream and to have plan in the region. We have 2030, 2025, 2050, 2040, all different 20s. But I can say we do have challenges to achieve all of those plans and wishes and so on. And the challenge is basically, in my opinion, and I don't want to enter into the panel, but this is a preparation to pass it on to Professor Tim Niblick. I think the 5 key challenges, in my opinion, are very simple. 1, we need to have a better legislation. We don't have enough legislation to deal with the privatization of a lot of sectors that the government wish to have. So everybody should work hard to have a better legislation that we need for the future economic plans. Second, we need to build capacity. On the government side and on the private sector side, both sides, we need to build capacity to be able to deal with the changes. It's true in some country you can have a KGB intelligence officer and make him a president, But it's very difficult sometime in the privatization to have a security officer and make him head of a corporate where profit should be more than the loss to be able to survive and to stay. So building capacity is very important. Third, we need to attract investment. And FDI, to attract them, they need to have a political stability in the region. And that's very important for them. There is a lot of attractive projects. I'm sure some of the colleagues here will talk about it. But of course, this requires a lot of hard work also to attract this investment. We need to have, fourth, we need to have a reasonable oil prices. If we don't have around $50, it will be difficult to have that. So those are some of the challenges. I would like to open the floor for Professor Tim Niblick to chair and to moderate the opening session. Thank you for everybody. Thank you for the speakers for coming. I appreciate that. And I hope you enjoy the next 2.5 days here in Cambridge and have a wonderful time. Thank you very much.
Thank you kindly. It is my honor now to introduce Ambassador Stuart Lang, who is Master of Corpus Christi College here at the University of Cambridge and is also a Deputy Vice Chancellor of the university. He will speak on behalf of the university and greet us all on behalf of the university. Please.
Assalamu alaikum wa rahmatullahi wa barakatuh. I am not as brave as Abdulaziz, and I have got 16 pages, which I'm going to use in speaking to you. Actually, there are only 6, and they're half pages. But nevertheless, there are some things that I think it is important to say. Not for the first time, I have the honor to stand before you today in order to send greetings from Professor Sir Leszek Borisevich, the Vice-Chancellor. He is currently away and unable to be present, but has asked me to speak to you on his behalf and on behalf of the University of Cambridge. I should explain also that the Vice-Chancellor stands down next month after a highly successful 7-year tenure. His place will be taken by Professor Stephen Tuke, who will bring great distinction to this important post in British higher education. So, in my capacity as a Deputy Vice-Chancellor of the University, I welcome you all to the 8th GRM. Cambridge is delighted and honoured to be the venue of this event, now a regular and important feature in the academic calendar. I also have the honour to speak as a trustee of the Gulf Research Centre, Cambridge, the charitable company which is behind the Gulf Research Meeting. Our welcome extends to you, the scholars, policy officials, and specialists who will participate in the workshops of the GRM, and also to the keynote speakers and to the several special guests who are attending. We quite understand why His Excellency Major General Dr. Abdulatif Al-Zayani, the Secretary General of the GCC, is not able to be here, but I'm confident that we shall nonetheless have a stimulating opening session. We are very glad to see you all here this afternoon and for the few days of the meeting. In previous years, I have said, while addressing the GRM opening session, that those of us who follow Middle Eastern affairs have sadly become accustomed to an almost perpetual atmosphere of crisis. I have also remarked that, in this part of the world, crisis can too easily turn into confrontation, confrontation into conflict, and conflict into catastrophe. A year after I last said this, referring to the disastrous conflicts in Iraq, Syria, Libya, and Yemen, and other areas of tension with their own, if less significant, losses of life, the situation has improved only marginally. That is, the intensity of the fighting in Syria and Iraq has faded somewhat. But the level of international tension, with maintained and even increasing confrontation between the US and Russia, remains threatening to us all. And the scale of the humanitarian crisis is unrelieved. we look at the huge numbers of casualties in Arab countries in the region, every one of which represents a personal and family tragedy. But on top of that, consider the vast numbers of people who have fled their homes or who have been forced into becoming refugees from their countries. And consider also the profound effect that the arrival of these refugees has on the countries who have taken them in. We who are lucky enough to live in peace in Western Europe can hardly begin to imagine this. Of course, the Gulf is not the stage on which these terrible dramas are being played out, but the Levant and North Africa have their connections with the Gulf, and Gulf governments and business people have a range of interests all across the Arab world. And meanwhile, Gulf governments have introduced their own brand of tension-raising. Recent political maneuvering is putting in peril the stability and interstate friendship that has for so long been provided by the Gulf Cooperation Council and its network of connections, political, social, and commercial. I echo the hopes of Abdulaziz that they will find ways of resolving this tension and finding new ways of living helpfully and positively and peacefully with each other. You will all have your own views on these events, and I don't think you'd expect me to take one side or the other from this podium. But all this reminds us why a conference such as the Gulf Research Meeting is so important. It recognizes implicitly that through improved understanding of the economics, politics, and social affairs of the Middle East in general, and the Gulf in particular, we may improve the chances of finding ways out of the sad circumstances in which several Arab societies and communities find themselves today. Informed analysis of problems is usually the preliminary to identifying solutions, even if we recognize that those solutions will, in several cases, take years to implement. And despite what I have just said about tension within the GCC, I repeat what I have said before. The countries of the Gulf are not without problems. Which of us is? Here in Britain, we also face a few. Gulf countries, operating from generally solid foundations in their societies and government structures, are well placed to play constructive roles in assisting sister communities in the Arab world to identify the paths to peace and cooperation, and then to reconstruction, or to reform and to return to prosperity. No man is an island, wrote the English poet John Donne. Globalization is a self-evident truth. We who live in Europe or North America, whether we are individuals or representing businesses or governments, we depend on trade and the other historical, personal, and political connections that we have with so many in the Arab world. We are motivated, therefore, by interest, but also by affection, in wishing to see Arab societies living peaceably with one another and ourselves, so that we can deal easily across borders and live in mutual prosperity. So it is that we from outside the region, as well as those who live within it, benefit from expanding and deepening our knowledge and understanding of issues affecting Gulf countries and their neighbors. Press, radio, and television report incessantly on Middle East regional events, and their eyes go to experts such as you to provide coherent analysis of problems and possible solutions. And why? Partly because events do not allow us to stand still, but also because issues and problems in the Middle East affect us all. So, your studies of the Gulf region carry global importance. Your agenda covers not only the problems, but also the strengths of Gulf economies and societies, and the potential of their human and other resources. You are standing in the present, but looking to the future. Outcomes from this meeting bring value to many. We are praying for rain over the next few days to keep you focused on your seminar rooms and away from the temptations of outdoor Cambridge. Before closing, I should like to give a few words of thanks and congratulations. First, to those who have sponsored this and previous and we hope future Gulf Research meetings. As Oscar pointed out, they're conveniently listed on the screen behind me. Thanks go to those who are taking the lead at your workshops, but also to the staff of the GRC, mostly in their offices in Geneva and Jeddah, and those who support them here in Cambridge, who work tirelessly to ensure a perfectly run conference. I congratulate those who have contributed to the now very impressive list of publications, books, articles, papers, and e-books which have been created out of the Gulf Research meeting. Most especially, we thank Dr. Abdulaziz Al-Sakar, chairman of the Gulf Research Center, who has been the driving force of the Gulf Research meeting and is generous supporter in so many ways. Ladies and gentlemen, I wish your endeavors at the 8th Gulf Research meeting every success.
Thank you very much, Stuart. Our panel today will address the challenges facing the Gulf economies and will be moderated by the one and only Professor Tim Niblock, who's Emeritus Professor of Middle Eastern Politics at the University of Exeter. The floor is yours.
Thank you very much.
And the podium is yours.
Thank you very much, Oscar. It's very nice to be here again, and thanks to all those involved. I was very pleased that the chairman and also Stuart Lang talked about challenges ahead, because that indeed, I think, is the challenge which we have today to address those. I am described as moderator of this occasion, but I would like to think of myself as an immoderator, as a provocateur, because I think if the challenges are not met centrally in the discussion which follows, then there's something wrong with the discussion. So I want to try to make sure that we do focus on the difficulties, the challenges. We're in a situation where the backdrop is formed by, of course, a lower price of oil than that which had shaped the economies a few years ago. And in response to that, there are the various visions and plans which are put forward. And we do need to find out whether these are realistic in any way. Is there any substance to them, or are they just pipe dreams to protect the positions of those in power? And there are all the conflicts going on, diplomatic, armed, proxy, and whatever, tremendous cost of this in terms of weaponry and such like. What effect is that going to have on the economies in the long term? What ways are there around the damaging consequences which would seem to follow from it? And there's also the question of the changing world balance, both in economics and in politics. The fact that the economies of the Gulf are now mainly directed towards the east rather than the west. What are the consequences which come from that? So in all this, I think we have a very good panel here to address these kind of issues. And I look forward to the discussion which we're going to have. But also, I think we have a very good audience, because I think you need to be participating in this just as much as the speakers. The speakers will have 10 minutes only at the beginning to each to introduce their ideas. And then we want it to be an interaction between you as the audience and them. So just to briefly mention who is with us today. There's one speaker who was slated to come, who was due to come, who unfortunately has not been able to come due to personal difficulties, and that is John Sfakianakis. So he was going to to speak on macroeconomics. I think now a lot of that side perhaps will also need to be covered by Giacomo Luciani, who will be covering energy landscapes and what the key developments in the energy sector are for the GCC economies. Giacomo has had a long involvement with the Gulf Research Center, and he's now, among other things, scientific director of the Master in International Energy of the Paris School of International Affairs and Sciences Po. And then there is Anand Rohtaji, who is Chief Operating Officer of Synergy Consulting, one of the leading consulting firms on PPP, public-private partnership, and on project finance. And he is going to be looking in particular at the outlook for the project market in the region, and in particular on PPP projects. Lastly, in my listing here, there is Manaf Al-Hajiri, Chief Executive Officer for the Kuwait Financial Center, Markaz. Markaz is a leading GCC asset management and investment banking institution. He was formerly Deputy Director in Investments in the Investment Department at the Kuwait Fund for Arab and Economic Development. And his field will be the challenges of turning the vision document into reality with focus on the private sector and privatization effects. In the note about the topic, actually, it wasn't mentioned what vision document. So I'll look forward to finding that out, and whether you are talking about one vision document or more than one. But the order, we will first start with Manaf, and then we'll go on to Giacomo, and then Anand. So can I hand over to you for 10 minutes? And you're welcome to speak from here or from there. I think people often find it difficult speaking from a sitting position, so you could come up here, but if you prefer that, fair enough.
It's the other way around.
Right, okay.
Thank you. Dear colleagues and friends, I would like to begin by thanking Mr. Abdulaziz Al-Sagr, not only for his gracious invitation, but for all the endeavors he has been undertaking in a space that is very little covered by most players in the Gulf. And he is definitely setting a role model for many to come in the GCC in terms of monitoring policy formulation and the GCC economies. So I asked the organizers to put this slide that captures pretty much what I would like to cover in case the 10 minutes allotted to me is not sufficient. So it's basically about reforms can wait, trust cannot. I would love to contemplate with the audience the fact that the urgency in terms of the fiscal soundness of most of the GCC countries is not as urgent as necessarily as urgent in the short term as many like to portray it. However, there are certain elements that are needed to be interwoven with our policy formulation that needs to be taken into account, and I mean by that trust. Trust as a factor that can be deconstructed into meritocracy, accountability, building capacity, redressing institutions, and restoring trust in all aspects of political and social life. So very quickly, I would like to cover 3 or 4 points. Most of the GCC countries today are talking about reform. Reform is something that has primarily to do with the diversification away of oil as a mainstay for most GCC countries. However, we have to remember that this plan or this aim to diversify is not a new thing. We always had it since the discovery of oil in most of the GCC countries, but it does go up and down depending on many factors. But to me, there are two critical factors that do drive the rhetoric on reform. They are oil prices and geopolitical tensions. So whenever oil prices go up, we tend to relax and forget about reform. When oil prices go down, the rhetoric about reform does intensify. I think the relationship with geopolitics is the other way around. When there is high geopolitical tension, there is a tendency to have to adopt social appeasement policies, and this can come at the expense of reform. So it does come in the back seat. In my company, for instance, we have created 4 permutations of reform that having to do with oil and geopolitics. And sometimes you have high oil prices and high geopolitics. It takes us to a different policy formulation at the company level, and I would assume at the state level the same holds. My second point has to do with the key components of reform. They are the common denominator in most of the GCC policy agendas or reform agendas are diversification, as I said, and local empowerment. I would like to touch upon each of them very quickly. Diversification has been defined as finding other ways of state revenues or economy revenues other than oil. However, one wonders if this is a sufficient aim, given that international competitiveness and creating an industrial base, for instance, was hardly mentioned in most of the GCC policy agendas. You can come with a situation like in Dubai, for instance, where a high degree of diversification has been achieved. However, international competitiveness was not there. So the same applies to local empowerment. One wonders if local Kuwaitization or Saudization or in any other replacing expats with the national workforce is going to be a factor that hampers competitiveness. In my company, for instance, we conduct analysis consistently, leading us to believe that the cost structure can be higher if we use local manpower as opposed to expatriates, at least in certain sectors. I would like to move to the third part of my intervention, and this might be the controversial thing you wanted, Tim. It has to do with the lack of capacity in our public institutions. There is no doubt that the formulation of all the policy agenda is coming from the public sector. However, we do have capacity issues and limitations in most of our state agencies. A reason that is leading us to resort to international consultants and Bretton Woods institutions. Sometimes we do see a misalignment of interests between the two, and I'll give 3 quick examples. Privatization. There is a lot of talk about privatization as if it was a magic solution. However, one forgets that in the absence of a functioning public sector, privatization can lead to catastrophic results. You have British privatization and you have Russian privatizations, you have Egyptian privatization. I think every model has its pros and cons. Another area where international consultants are focusing upon with insufficient analysis, in my opinion, is cost cutting. There is a lot of talk about cost cutting. However, we hardly hear anything about wasteful spending and corruption. The eradication of corruption is not something that sits high in the agenda, nor holding people accountable to their responsibilities. The ease of doing business is an area that is consistently mentioned by international consultants and the World Bank. However, aligning the KPIs, or what we call the key performance indicators of public officials leading the public institutions who are in charge of the public investment environment, are not properly aligned with the policy agenda, nor are they addressed by the consultancy industry. I want to end with one bright spot, in my opinion, which is regulation on the financial sector. I do believe that an impressive work or achievements have been achieved in invariably most GCC countries with the advent of the central bank and the capital market authorities in Saudi Arabia, in Kuwait, and in the UAE. I think stronger regulation, if it enjoys the required capacity and meritocratic human resources, can be a formidable factor of imposing trust along different parts of the society, having to do with letting people be very clear on what's expected with them, meritocratic appointments, involving stakeholders, and politically empower all the stakeholders in the economy. With this, I would like to conclude my 10 minutes. Thank you.
Thank you very much, Manaf, and thank you for keeping within your 10 minutes. I think now we'll go straight on to Giacomo, energy landscape, and what the key developments in the energy sector mean for the GCC economies.
Thank you, Tim. I prefer to stand. Just before coming here, I went back on YouTube and looked at what I told the same audience 3 years ago in 2014 when it was September 2014 when oil prices started to come down. And so I'll make sure that I don't contradict myself too much, or I will ask forgiveness for what I said then and has not turned out to be supported by reality. What has been supported by reality is the fact that the decline in oil prices corresponds to the dynamic of fundamentals in the oil market. There was simply too much oil around. At that time, 3 years ago, some people were speculating that this was a political move on the part of Saudi Arabia to punish Iran, to punish Russia maybe. I was skeptical about this, and I remain skeptical. I think what has happened in the past 3 years has confirmed that the behavior of the oil market has fundamentally changed. And it is, of course, largely a question of shale oil in the United States. As prices plummeted, shale oil production has declined somewhat, but much less than was expected originally. And it has quickly picked up again. As a matter of fact, it started picking up already before the meeting of OPEC in November 2016, which inaugurated the agreement to limit oil production and try to bring oil prices back to a reasonable level. 3 years ago, people were looking at the decline in price as something temporary and at the possibility of prices going back to well above $80 per barrel within a short period of time. Shell at that time concluded the takeover of BG on the assumption that by this year or next year at the latest, prices would be back in the $80 per barrel range. It is today clear that this is not going to happen. The agreement of November 2016 has not succeeded in fundamentally changing the level of prices. There has been some improvement, but it has been minor. Besides shale, what is happening is that the major international oil companies have changed their investment attitude. They are investing less, and they are also investing in easier target. And this is something which is frequently forgotten. In the oil industry, you may go for large, ambitious, extremely risky targets, stuff like the famous or infamous Kashagan oil field in the Caspian, or challenging oil fields in the Arctic or in extreme deep water. But that's not the only thing you can do. You can also go looking for smaller fields in easier conditions, which are less costly. And this is exactly what the international oil companies have been doing successfully in the past few months. So the fact that they have been able to turn out, as we hear in the past few weeks, returns for the first semester of 2017 that are better than most analysts expected, is a confirmation of the fact that oil at $50 is not a death sentence for the international oil companies. It is something they can live with, and they can still increase production. What does this mean? It means that any attempt, which is sometimes discussed or proposed, for Saudi Arabia and the other major Gulf producers, Kuwait and United Arab Emirates, to aim at playing again the role of swing producers, in other words, significantly affect the level of the oil price, is doomed to failure, at least in the foreseeable future. I don't know what will happen past the middle of next decade. If you ask me what is going to happen past 2025, the answer is it will depend on demand. If demand for oil continues to grow, then we may reach a stage when there is a crunch on supply. But increasingly, we hear voices that propose or expect that demand for oil will peak, if not in the 2020s, in the following decade. And therefore, there is a lot of doubt about the possibility of demand creating conditions of tensions in the oil market again. The fact that not only the UK or France are envisaging a ban on sale of internal combustion engine cars by 2040, but India as well, and China is foremost in promoting electric mobility, means that some of the expectations about the future of demand are likely to be proven wrong in the future. So this creates a challenge, of course, and as Manaf already said, I don't think the main issue is with the fiscal aspects of it. The main issue is with accelerating the process of economic diversification. Accelerating because this is nothing new, again. I fully subscribe to what Manaf has just said. We have been discussing, and countries have been planning for and aiming at diversification for decades. They have achieved very substantial successes in that respect. I think one should not belittle the importance of the development of refining and petrochemical industry in these countries, notably in Saudi Arabia lately, but much remains to be done. And especially the emphasis, the engine of growth has to shift from government expenditure to private sector expenditure, private sector investment and consumption. And that is difficult, and it is not happening. And notwithstanding rhetoric and expressions in that respect, which are, for example, included in the 2030 vision document of the Kingdom of Saudi Arabia, where it is said that it is expected that the private sector will play a major role. Yet, it seems to me that nothing concrete is being undertaken, and there is a lack of understanding, a lack of proposals of what would be needed in order for the private sector to come to the fore and play the driving role in the process of economic diversification. It is not just an issue of privatizations, and it is especially not an issue of privatization if what is meant by that is the sale of a minority stake in state enterprises, which is bound to be floated internationally and bought by Chinese investors. So this is not what would be needed. And it is also an issue of finally coming to terms with the excessive dependence on expatriate labor and a model of development which is based on cheap labor and low productivity. We need to shift from, the region needs to shift from that to a model of development which is based on higher productivity and higher wages in the economy. Let me come back to energy for a final word and say that, of course, there is not just oil, there is not just gas. It is very important to decisively move in the direction of developing renewable energy sources and also, in my opinion, nuclear energy in the region because eventually it is necessary to substitute for most, if not all, fossil fuel in the generation of electricity, which is fundamental from a security point of view, not just for the future of the Gulf economies, but for the very survival of Gulf populations, even in the short run, as we know. Much has been said about that, and something has been accomplished, but not enough. These are areas in which some very fast development and very fast improvement would be possible. Everything is ready. The only thing that is lacking is the decision to go ahead. And as far as I can see, this decision is not coming with the speed and aggressiveness that would be needed to convince the world that we mean business. Thank you.
Thank you very much, Giacomo, and also thank you for keeping within the time. So if we can go now straight on to Anand, the outlook for the project market in the region with a focus on PPP.
Thank you, Professor Tim. It's an honor being here. You know, the place where I've grown, Cambridge has always been a mecca of education, so it's extremely exciting to be here. And thank you, Dr. Abdulaziz, for inviting me. It's, you know, for me, it's a very unique situation. You know, I come from a consulting background, and being among so many academicians, talking about something which is extremely close to my heart, that's PPP. You know, that's what I do for bread and butter. And hence, you know, the energy in talking about this. You know, I've personally worked on the PPP in Middle East since 2002. So I've seen some of the early PPPs which have happened in Middle East. And, you know, we're currently doing a lot of privatization and PPP work in Middle East. There is a difference, a very stark difference. Some of it is the right thing to do, and some of it is not what was anticipated. Before we move on, taking a step back, a lot of the PPP discussions are hovering around fiscal deficit right now, and PPP being the elixir to resolve the entire deficit and meeting the social and economic growth targets. Unfortunately, that's only one part of the overall PPP benefits. And if and that's what governments are doing right now, only focusing on cutting upfront expenditure, it is bound to fail. PPP is not about saving upfront funds. It's about creating a very, very long-term, a very disciplined arrangement between the government and the private sector. And if this arrangement were to even shiver in between, the entire thing can fall as a pack of cards. The second key aspect is most governments do not appreciate that PPP on a large scale, on a long-term basis, are still value for money. We at Synergy had done some very high-level analysis of comparing two power plants, one being developed by the state-owned utility and one being developed by a private sector. And we kind of evaluated the cost overruns on the project development construction side, and then the cost of maintaining it, and also the availability and efficiency of the power plant. And our maths gave us a number of 2.3x, which means the cost of generating power from state-owned power plant was 2.3 times the cost of generating power from a private sector. And guess what? Private sector actually made money from those projects. But unfortunately, that focus is not there today. And the third aspect is, there's a lot of discussion around oil being at 60 or 65 or 70, depending on the research report you read, to make GCC economies stay afloat. I think the number is much lower if the economies can focus towards efficiency. As some of my esteemed panel members have said, there is a significant lack of efficiency in the way business is done. I'm sure anybody who stayed a couple of months in GCC would appreciate that. With that background, touching a little bit about PPP and what we've seen in the past. Coincidentally, some of the countries in GCC have done quite a lot in PPP. Uniquely, Oman has been the flag bearer of this process. They started their process way back before even other countries thought about privatization. They've had the most successful program. There have been PPP programs in Saudi, in UAE, in Qatar, in Bahrain, but they haven't been able to continue the momentum, especially in 2013, 14, 15, when oil was at very high prices. A lot of these PPP programs were shelved on the account that the cost of capital for a government sector is significantly lower than the cost of capital for a private sector, which obviously, as I said, that's one line out of the 20 line items. Eventually, government sector is bound to be more expensive. So that's the bad part of the story. The good part of the story is there have been some successful PPPs. They have created local companies which have done very well. I'm sure whoever has evaluated GC will know there are companies like Aquapower, completely private sector, done very well from themselves, built from scratch, have predominantly focused on PPP and privatization. So what it does is it leaves the government with an existing framework, a set of documentation, a framework of risk allocation between private sector and government sector. Somebody may say, is it really important? The answer is yes. Because 90% of the energy in creating a PPP goes in disputing an argument between the government and the consultant on what should be the risk allocation framework. So here you are today where you already have the framework ready. So to start the next round, it's much simpler and easier. The second aspect is that because of the excessive oil prices, most governments invested in creating white elephants, as I say. I'm sure most of us can go to GCC countries and see those white elephants. They were white elephants yesterday, they are white elephants today. But in our opinion, these are value creators for tomorrow. These are sitting assets which, if monetized correctly and efficiently, can yield benefits for an extremely long term for these countries. Now, with that kind of background, what is happening today? There are a couple of factors around privatization which is integral to this, to business. The first one is credit rating. Unfortunately, because of low oil prices, there are countries in Middle East which are below junk grade. Is it a concern? Yes, it's a very big concern. Why? Because these are countries which are struggling to raise debt from international markets. It's a bigger concern because these are countries which are very high-income countries. So there is a significant mismatch between fiscal strength and the income of the individuals. So this anomaly will reflect in some form or the other. The second part is almost every country has set up their teams on privatization. Saudi obviously has moved very well. They've created National Center of Privatization. They've had extreme focus on each ministry doing PPPs. So there is a lot of energy, there is a lot of focus on moving this forward. A lot of domestic, local capacity building is being done. A lot of localites have been hired or employed by the government sector, and consultants have been hired to supervise the first few privatization or PPP programs so that the capacity building in government happen. And I think all of us are reading about the PPP programs and how these programs are moving into almost every sector, from social infrastructure to healthcare to education. With this, I think I'm running out of time, but the future outlook obviously looks extremely exciting. The opportunities lies there. Most countries stand in a very, very strong economic platform, so for them to privatization is very easy. There is a lot of focus on energy efficiency. There is a lot of focus on local capacity building. However, there are certain caveats which countries have to look forward to. The first one, as Dr. Abdulaziz started with, is local capacity. The local capacity in these countries is very weak, and it is being further exacerbated by the removal of expats. If you see some of these programs, they're predominantly consultant-driven programs, and which is an unfortunate reality. Most of the vision documents are made by consultants, and they're very limited buy-in by the local teams. The second biggest risk is further downgrades of credit. As I said, there are two countries already below junk grade. If there's a further downgrade, these countries will struggle to raise money from international market, which means their entire privatization and PPP program will struggle. The third major risk which is there is private sector capacity. One of the intention of PPP was to allow domestic contracting companies, domestic investment companies, and individuals to start looking at PPP programs. But there is a significant amount of gap, and some of these initial PPPs have to be successful to build that capacity locally. And I think the last one is strengthening the legal system. But I would like to differ from what Dr. Abdulaziz said. The legal system for this perspective is not the PPP law, the legislation. PPP law and legislation is the tip of the iceberg. The bigger test of the legal system comes when these projects go for dispute and how these disputes are resolved. In an international market, the legal systems are strong that you can go and fight governments in their country, in front of their local courts, and win a case and get compensation. That's the test of the legal system, and that's where most of GCC legislation and legal system has to get to if this PPP program were to be successful. And the last one, not the least, is developing awareness around government sector on why PPP is needed. Not simply looking at the fact that it's a upfront capital reduction program, but a larger picture where it's an association, it's a relationship, it's an agreement between the government and the private sector for a 20-year program. Any one of them failing will have compounding effect on the entire program. So with that, a few thoughts of mine, predominantly negative in nature right now, I will put it back to Professor Tim. Thank you so much.
Thank you. Thank you very much, Anand. So we now go into discussion. I think what has come out of a lot of this is good things being said, but not necessarily being done, whether through lack of capacity or through political failure. In comments that you make about this, questions that you ask, you don't necessarily need to put them as a question. It could be just as a comment of your own. And they don't need to relate only to the specific things which have been said. If you want to raise some other issue, you can do so. Now, I should tell you that there's a problem in carrying out this kind of operation now, because all of you can see all of us very well, because the lights are facing in this direction. We can't see you, or at least you're there as rather vague shapes. And therefore, for someone who is in my position at the moment wanting to take questions, it's difficult for me to see who it is. So I'm actually going to move over to that side so I can actually see people and I'm not blinded by the lights. When you do say something, it would be useful if you could introduce yourself, say what institution you're from or whatever, just in a single phrase. And then if it's directed to a particular person, please say so. We'll start with maybe 3 or 4 different questions or comments. I'm going over here now. I can see you now. Okay, can we start from here?
Thank you. This is Mohammed Abduraouf, Sustainability Research Program Manager at the Gulf Research Center. I have 2 comments. The first one related to the comment about nuclear energy, which mentioned by Dr. Giacomo. Unfortunately, I have a completely different opinion coming from environmental background. I always attend many events and people speak about nuclear energy as it should be a major component of energy mix in the region. From environmental point of view, it's completely rejected and it's not sustainable and it's polluting. There is a great problem with the energy waste. From the cost point of view also, it's very costly, not taking in only the operating cost, but construction and decommissioning and all that. And also, if we look about the future of the energy in the region, we must think that there will always be a demand for oil and gas. The demand will not disappear. If we want to have a better energy strategy in the region, we should have an energy mix. An energy mix with traditional sources and renewable sources, but definitely excluding nuclear energy. The second comment about the legislation, corruption, and all these issues which was mentioned. I think the main problem in the region is governance. If we want to improve everything, every sector, and achieve a good economic prosperity, we need to improve the governance. There is a problem in governance not only limited to the legislation, but also policies, transparency, fighting corruption, negotiation, consultation with public, and so on. So all pillars of the governance should be improved in order to have a better results. Thank you.
Okay, I can see here, yes. Yeah, microphone coming.
Yes, first of all, thanks very much to the speakers for very interesting remarks. My name is Rasmus Bertelsen. I'm from the University of Tromsø, Norway. Earlier we heard about the larger global shifts with the rise of Asia and GCC economies turning more and more towards Asia and East Asia, which is of course the very large energy trade between the GCC and East Asia. I don't think that shift towards the east was addressed by the three speakers. And I have a very specific question concerning that shift from west to east, concerning the GCC. There is a very strong legacy of educational and research exchange between the GCC and the United States and Europe and the West more broadly. We are all a part of that legacy. So my question to the panel is there sufficient mutual knowledge between the GCC and especially East Asia? Capacity has been mentioned repeatedly. Is there both in the GCC and in East Asia, is there the knowledge capacity in the private, public, academic sector, etc., to sustain that growing energy trade, etc.? Thank you.
Okay, there's a question at the back here.
Thanks very much. Adel Hamazia from St. Anthony's, Oxford, and also Oxcaps. A couple of quick questions, if I may. The first one directed to Professor Giacomo. I was hoping you could share some thoughts on somewhat of an elephant in the discourse around energy in the Gulf, which is the prospects for Saudi Aramco's IPO. And I'd be interested to hear your thoughts on the challenges surrounding that, and whether the question should really be about the public investment fund strategy and not financial diversification, but what it can do to foster infant industries. The other question I had is around...
Sorry, could you repeat the question? We could barely hear you.
Can you hear me now? Is that better?
That's better.
Yes.
That's better.
Just some... if you...
You know, it's not only a question of us being in the light and you being in the dark, but
Yes.
it's also a question of all the loudspeaker projecting towards you. We can't understand the word of what you...
Sorry, can you hear me now?
It's,
is that better? So a question for Professor Giacomo Luciani. Thank you very much.
Good.
You can hear me. Fantastic. Could you say a little bit about the challenges and prospects for the Aramco IPO?
Yeah.
And also whether the question should really be focused on the public investment fund strategy, and whether we should be thinking about economic diversification and the funds which would be deployed for fostering infant industries rather than financial diversification. I was also wondering why we did not hear about, for me, the only real interesting reform we've seen in the Gulf on the economic front in recent years, which is energy subsidy reform, and what to say about energy subsidy reform 2.0 and 3.0 when it comes, and the implications for energy-intensive state-owned enterprises. Though we have a social safety net in Saudi Arabia, for example, which is, of course, the largest state in the region, what will be done to support those rent-seeking companies that have been so dependent on cheap energy for so long? Thanks very much.
Right. We could have one more question at this stage. There's one in the middle here.
Hi, Ashwin from Carnegie Mellon University, USA. A lot has been said about diversification of fuels in the energy mix, as well as public-private partnerships. What I wanted to know was, what is the challenges of, the issue of electricity market restructuring in the GCC? Is it possible that, different sorts of energy mixes and power plants could bid into the system in the GCC to ensure competition and make sure the cheapest and possibly even the most environmental friendly electricity source reaches a customer's house in the GCC's perspective? Thanks.
Right. Now, if we can go across to the speakers now, 2 and perhaps 3 of those questions were very much directed to Giacomo. So perhaps we can start with Giacomo and then ask for comments from the other 2. Giacomo.
Thank you. As I said, I'm not 100% sure to have understood the question, so please, feel free to interrupt me. On the issue of privatization and why it is not decisive, I must say the following. Privatization has been in the books for the past 35 years at least. SABIC was expected to be privatized at least 70% ever since 1980, and it hasn't. The privatization of minority stakes to a few fortunate investors, which is what we have seen in the case of SABIC. You know, SABIC is 30% privatized, and the circulation, trading in the stock is almost nil, because whoever owns the stock keeps it for the long run. So it has not been an effective tool either to implement governance. SABIC continues to be essentially a state-owned company, nor to diversify. It has just simply not worked. It works if you privatize to a larger extent and you actually submit yourself to the discipline of the financial market. So to me, it would be more important to complete privatizations that have been left halfway through, that have been started but never completed, rather than engage in new privatization. And especially if, you know, eventually you are floating the asset on international market and targeting institutional investors, you know, that doesn't really mean much in terms of diversification. Energy subsidies reform is important. It is in many ways perhaps something on which some progress has been achieved. Relatively speaking, it's not the one area in which progress has been the least. I don't think it is so urgent, and I don't like to look at it in terms of energy subsidies, because it is questionable whether you can speak of subsidies or simply low pricing of energy. What I think is necessary is to create a culture of energy saving, of avoiding the kind of waste and excessive use which is very common in the region. Energy consumption must be curbed, and the concept that energy is a valuable asset that must be paid for has to be enforced. So this is similar to energy diversification. The region is just simply excessively dependent on hydrocarbons for power generation. There is no other part of the world that is so exclusively dependent on oil and gas for power generation. So this has to be changed, which doesn't mean eliminating. I mean, I think it's today totally unrealistic to think in terms of eliminating reliance on hydrocarbons, but at least for new investment, at least for new supply, we should be focusing on alternative sources. And alternative sources, of course, need to be renewable energy sources. In my humble opinion, it is difficult to envisage a development of alternative energy sources which is as fast as required by a process of reasonable diversification of energy supply. So nuclear, I believe, is part of the picture, not an overwhelming part, but part of the picture. I think in terms of rent seeking, what we need is an evolution and a change in the forms of rent circulation. There are some established forms of rent circulation that have been functional in the past and are kept continuing but are no longer functional. Low energy prices is a case in point, but expenditure, massive expenditure on infrastructure is another case in point. It was very necessary in the 1970s and the early 80s it's no longer, it doesn't bring the same benefits today. So rent accrues to the state, and the state needs to circulate the rent. So the problem is not that rent is circulated. The problem is not that people are rent-seeking, because to a certain extent this is inevitable. The problem is to circulate rent in a way that encourages transformation and development. And that is possible, but it's not being done. It's not necessarily easy. It's not an easy task, but we have to find solutions in order to achieve this task. Circulate the rent in a way that is functional to development.
If I can add to that.
Yes, should we go to Anand and then on to Manav?
I think we've had the discussion around energy subsidy. There is a slight movement. All of us have seen electricity prices go up in Middle East over the last 2 or 3 years. Were they adequate? No. But are they enough to push consumers to start looking at efficiency and conservation? I think the answer is yes, and I'll tell you why. A small example is even Saudi, the commercial tariff from the grid for commercial consumers is close to about 8.5 cents per kilowatt. The current price of solar programs, let's say the rooftop solar, is close to 4.5, 5 cents. The delta is all savings. And we are now seeing a lot of companies saying, we have roofs available, we have car parks available. Why don't we use that, generate energy, and save that money? That's one perspective. So the answer is the electricity tariff is adequate enough to nudge consumers on the conservation, to move towards electricity conservation or reducing consumption. The second thing which we are uniquely seeing is that because of the slowdown in demand, most companies have had flat profit lines. So now they're looking at how to improve their profitability. And energy efficiency is coming out to be one of the easiest targets on their radar. So there is a lot of focus now on energy efficiency and improving that. So I believe, give it a year or 2 more, we will see a lot of action around reduction in consumption of electricity. Oman is a very good example. Oman was intending to expand their grid capacity in 2020 and 2021, and they've just pushed it by 2 years. It's a classic example of how efficiency is working. Dubai is a good example where DEWA is promoting significant amount of rooftop generation to reduce dependence on grid power, which is predominantly hydrocarbon nature. So that's one response. The second thought is around energy diversity. There has been a lot of steps taken, though by very limited pool of countries in GCC, predominantly Dubai, Abu Dhabi, and Saudi. They've had quite an active privatized renewable energy program. So somebody who's following the renewable energy market would see that Dubai closed their 800 megawatt PV early this year. And same with Advia, which is the Abu Dhabi utility, closed a 1,200 megawatt PV, that's photovoltaic-based generation. Saudi is currently running its solar and wind program and intends to do at least 600 to 800 megawatts every year. So I think the ball has started rolling in some of these countries. I would guess by 2019 and 2020, we could see the renewable energy contribute to at least a double-digit percentage of the overall grid capacity. So the ball is moving there, but there are countries which are still struggling, countries like Bahrain, countries like Oman, countries like Kuwait, who have not been able to move forward on the whole renewable energy strategy.
Yes. Yeah. Very short, 3 quick points. In terms of rent seeking, at the risk of sounding like a populist, I have a reservation against the term rent seeking because it implies, it puts the burdens on the population. If you follow all the debates in the Kuwaiti parliament, for instance, where there was a lot of resistance against lifting subsidies, I think the issue was more on striking a balance between the wasteful spending and sometimes corruption and reforms, because you cannot ask people to pay more taxes, even if it's a symbolic amount, if the amount of wasteful spending is disproportionately high. So I think we should be more balanced in addressing putting the burden on both sides, the state and the population. The gentleman who asked about the shift to Asian countries, at least from my side of the business, I work in the asset management, investment banking industry, and to a large extent, we have similar views with many sovereign funds in the region. I think, again, let's face it, different Asian countries have achieved variable successes in terms of combating corruption. So I think the safe bet was to go to stock markets or what we call marketable securities, so investing in bourses or private equity funds that are strongly regulated by third parties. Finally, the transmission of knowledge. The transmission of knowledge, again, the shift to Asian countries was not uniform. Yes, they have achieved certain successes in certain pockets of the economies, but I think due to cultural affinities with the West, with the Anglo-Saxonic world, with France, and the affinity with the educational institutions remains to be more biased with the Western Hemisphere. I would like to emphasize, and this is, I don't, at the risk of sounding politically incorrect, I do feel that the transmission of knowledge has been unfair or an unfair game in the sense that there have been very generous investments and donations from the Gulf countries, Saudi Arabia, Kuwait, Qatar, and many other GCC countries in terms of supporting prestigious institutions. Yet, if you look at the research community in the GCC itself, it continues to be shallow and in dire need of capacity building.
Thank you for those responses. Could I actually ask for a clarification on one point from Giacomo? You talk about the policies which are needed for development and to resolve existing issues. Are you saying in this that these are not present in existing visions and plans which government has? Or are you saying that they are there, but nothing is really being done about them in a realistic way?
I don't see much present in the visions. I think there is a lack of understanding and good advice also concerning what needs to be done to support the private sector. There is a pattern of supporting the private sector, again, which has been inherited from the past and has been extremely successful in the past. This is to spend government money and allow the private sector to grow and become more capable on the basis of essentially serving the needs of the state and the state employees. This has been successful in the past, but we have come beyond that stage, and several of the business interests in the Gulf are today capable of turning into international businesses. Some of them have invested internationally. In a process of corporatization and evolution from family business into proper corporate entities, specialization and concentration on those areas where companies are capable of achieving best results should be encouraged. This is something that has, again, been spelled out a long time ago, But in the past 15 years, I would say, it has not received the attention which it would have deserved. Today, the private sector in the GCC is more dependent on government spending than it used to be in 2000, okay? In 2000, after 15 years of low oil prices and initially very sharp recession in the last part of the 1980s, the private sector was coming to the fore, and I've written about it, you know, was coming to the fore, including as a political actor in the region. Then when oil money started coming in much larger amounts, this was lost. The state began spending more abundantly. There was no explicit policy for the transformation of the organization of the private sector, just as there was no continuation of privatization policies. And so now we find ourselves in a situation in which essentially more than a decade has been lost in a process of transformation that had started. And now you need to catch up, which is not going to be easy.
Manaf or Anand, do you have any, would you like to express any agreement or disagreement with that? Manaf?
Of course, I cannot say more than what Giacomo said in terms of the oil sector, but in the energy sector. But there's definitely, again, going back to the capacity building thing, I think the energy sector is no exception. It has a lot of need to build capacity in it to align its strategic interests with the strategic interests and the vision of the states. I will give you an example. Setting the production levels or targets, for instance, is something that has been controversial in my country, at least. It does not seem to have a sole owner in terms of setting the targets and aligning all the resources to meet it. So I do believe that this is a serious capacity issue and governance issue in the institutions.
I think I agree with Jack and Manaf. We've lost a lot of time in building capacity on the private sector side. But I think the opportunity is not all lost. Given the volume of privatization and PPPs which will come in Middle East, I would expect private sector to start playing a bigger, much larger, wider role as we move forward. And hence, we can see a lot of private sector companies stepping up, wanting to fill the gap which the government has left, and building in-house capacity to meet that requirement. Yes, it'll need time, maybe a couple of years more, but I think eventually it will get there. The only gap which I see here is, as I said in my initial thoughts, is if you club this with the whole localization movement, where Saudiization or Kuwaitization or Emiratization, both cannot go together. On one hand, you're trying to build talent strength in private sector, and on the other hand, the existing talent which exists in private sector is with the expats. You're removing them away. So both cannot go together. If both are happening at the same time, then there'll be a significant drag or delay in the success of the privatization program. So they have to do a balance between the two.
Okay, I think we have time for another round of questions. There was one which seems to have disappeared here. Yes, back there. Yes, you.
Thank you. Thank you to the panel for your comments. I hope I'm speaking clearly enough. The question I have is that there has been several comments about diversification in your various addresses over the last hour or so, but actually there's been no actual real talk about diversification whatsoever. It's all been about the oil industry or downstream activity. Do you not have any opinions about the classic elephant in the room, which is the Dubai model, what Dubai has diversified over the last 30 or 40 years, and what they have done in the way that they've done it, the professionalism, the way that the whole of the Gulf now, globalization was brought to the Gulf because of what Dubai did, because of the containerization, the establishment of proper activities, whether it's an impartial legal service or civil service. These are surely factors which you perhaps, or we all should be taking into account. The fact that they have developed industries out of nothing, tourism, or book societies, or sport-related activities, all these things grew out of, I know I'm being provocative here, out of what Dubai did. And only now are other states within the region beginning slowly to crawl along the same sort of path. Do you not feel that the Dubai model or something similar is something that should be emulated by other Gulf societies? Thank you.
If the microphone can pass along that line, three people along. Yeah.
Hi, Marwa Mazi at the University of Washington. So my question is to Manaf. You did point out two things that impede economic diversification, namely when prices of oil are high, that countries relax so that they don't change their ways and they forget about reforms. And on the other side, when geopolitics are challenging and uncertain, that reform also gets relegated in order to appease the population. So this seems very poignant, actually. Would you say then that the optimum conditions for economic reform would be when the oil prices are low, so that pushes for some behavioral changes on people's side, but also when geopolitical stability is a given, and that kind of makes the government not too anxious as to impede the reform. If these are the conditions, then can you go over some of the inventory of the situations where that ever applied? I think the Dubai case would be a situation where maybe that helped. In my own work, I work on Qatar, and I would have expected that between 2012 2017, there were efforts into this kind of economic diversification, basically due to the second element of stability. Vis-a-vis Qatar itself. Would you expect then, if we're doing some math here, would you expect then that there would be some decline in the efforts of diversification of economic conditions and state-society relations in Qatar, given the very geopolitical instability or risk thereof in this year, for instance? Thank you.
Okay, yes, one here, and then I'll come to you.
From the National Defense College in Abu Dhabi. When it comes to diversification and nationalization, you said you can't do them at the same time. They can work at cross purposes. So when it comes to sequencing, which would you recommend? Do you try to diversify your economy even though you're relying on expats to do it? Or do you try to empower and not diversify as quickly or, you know, as maybe a higher productivity as you would wish?
Okay, now if we can go here.
My name is Froylan. I represent Cornell University. In the GCC market, there's a embedded tension on how to appropriately regulate the market, you know, between the private sector and GCC governments. Now, my question to you, actually, the first presenter, actually, given the declining price of oil, to what extent can GCC countries localize their market if they continue to employ a laissez-faire approach in the labor market? Thank you.
Would you like it repeated? Yeah, could you repeat it, especially the last part?
So I said there's an embedded tension in terms of how do you appropriately regulate the labor market, between a tension between the private sector and the GCC governments. And the problem is that most private sector, particularly in the context of construction industry, bypass a lot of the regulatory frameworks set by GCC governments. A lot of improvements have been done. So my question to you is, given the declining price of oil in the future, currently and in the future, to what extent can GCC countries localize their labor market if they continue to employ a laissez-faire approach in the labor market? Thank you.
Okay, thank you very much. It seems very appropriate to ask a Kuwaiti about Dubai, the Dubai experience. And also because especially the first two questions seem to be very appropriate to you specifically. Manaf.
Yeah. Dubai, I did touch upon Dubai in the beginning, in my beginning. It's not deep enough, I know, I can see it in your face, but Dubai is a great example. It is a model that has transformed interestingly and very aggressively to the services sector. And so if you look at the diversification story, it's a beautiful diversification story. However, and this is not my interpretation as a Kuwaiti, I do believe that the ceiling should be for the Gulf countries to be higher than Dubai, in the sense that there should be developed an internationally competitive, tradable sector in terms of industries, which is something Dubai has not achieved so far, to my knowledge. There is an excellent IMF report on that. I can give you the name later on, but I do believe that competitiveness is the key. I'm not sure if Dubai has managed to develop a very competitive sector, but yes, it has diversified. For my country, I would love to see a more competitive, tradable sector in terms of petrochemicals, for instance, that is able to compete internationally. This is my ambition for Kuwait. The lady who asked the question about reform, diversification, it depends on the definition of reform. Again, and I will be provocative again, I'll put the blame on the consultancy industry. To me, because we are getting used to defining reform very narrowly in terms of lifting subsidies, privatization, and all that. Reform, in my opinion, is a little broader than that, and it can entail some painful changes, both for the population and for the states. To me, diversification may not be necessarily a reform. A real reform, in my opinion, is something that takes away from the people or the state and establishes a new equilibrium between the two. Not theoretically, but it did happen in Kuwait in the 1990s when oil prices were at record lows and we had a relative geopolitical stability. Kuwait did embark on interesting privatizations when Kuwait Investment Authority offloaded many of its holdings in companies where it had interest to the mutual fund industry. The company I run, for example, is a company that manages mutual funds that have been created with the push of Kuwait Investment Authority. I have to emphasize that it was not a gift or a cadeau, because we had to match everything that was given with an equivalent amount from our clients and our proprietary balance sheet, which is important, diversification or empowerment. You know, when we talk about empowerment, I don't think there is a magic number. If you go to the statistics of the Planning Council in Kuwait, for instance, you will find that someone was telling me the other day that Kuwait needs 15,000 nurses, for instance. On the other hand, if you go to the civil service sector, I do believe that there is a case for Kuwaitization. So I think it's sector dependent. I hope I answered all the questions from my end.
Yes, I would like to say something about Dubai and about reliance on expatriates. Dubai, of course, is a success case, that is clear. Whether it is exportable and to what extent it is exportable, I think we have to have some reservations. What I can see is that the Dubai phenomenon may grow and spread. Dubai is a metropolis of world significance, and if, you know, in a scenario in which current conflicts are overcome, and you have, as it has been envisaged, development of fast local transportation, fast train transportation, whereby you can go from Dubai to Abu Dhabi in half hour or 40 minutes, and then on to Doha in a short time. I can see the progressive emergence of a sort of Gulf cluster of metropolises, which is not different from, say, the east coast of the United States or similar urbanization phenomena. And so it can spread. But whether you can adopt that same model for Kuwait or the west coast of Saudi Arabia, I sort of doubt. You have to find something which is different. After all, you know, diversification must be different, okay? Otherwise, it's not diversification. Reliance on expatriates is inevitable in the region. So the point is whether you rely on cheap, low productivity labor, or you adopt a policy to progressively increase the cost of labor, defending the interests of the workers and aiming at a higher level of wages, and combine that with higher productivity. Productivity of labor has been declining year after year throughout the GCC. Now, this is not something which is sustainable as a form of development. To have development in a country in which the productivity of labor is lower and lower because you are relying more and more on less and less skilled labor, that doesn't work. Experience tells us that expensive labor, which is high productivity, is a solution for the future. The country that exports the most is Germany, which is a high-wage country, and a country with a relatively strong currency, the euro. The country where I live in, Switzerland, has an even stronger currency, and successfully exporting, okay? And they integrate expatriate workers, they integrate immigrants, but they do so by paying them the Swiss wage, not the Bangladeshi wage, okay? That is the difference. So I'm not saying you should not rely on expatriates, but you should not rely on foreign level of wages. You should not go in a race to the bottom. You should go in a race to improving quality. That, of course, has not happened, and it's very late in the game, so it will be extremely painful to reverse course, but it is a necessity.
Imagine that one could have a very interesting conference focusing on this question of productivity of labor in the Gulf specifically, and also another one on Dubai. So if we can go now to Anand.
Sure. I think, technically Dubai is not delinked or decoupled to oil. What is Dubai? Dubai is the real estate and service capital for the Middle East. And if you see, if history were to be of any proof, every time Middle East has, oil price has struggled, Dubai has struggled. Even today, with low oil prices, there's a huge glut of real estate in Dubai. Dubai economy has slowed down significantly, both on the real estate side as well as on the services side. So it'll be incorrect to say that Dubai has been able to create a model which is decoupled or delinked from oil. I think there are countries which could be able to diversify beyond oil, and there are options available. For example, Saudi has a very big focus on religious tourism. That at some point of time can be a very, very large source of revenue for the country. Oman, for that matter, has presents a lot of minerals which has not been mined because oil and gas was the focus. So there is now a renewed focus around that. Has it been done in the past? Answer is no. Are they late? Yes. But will it be done in the future? Yes, they are doing so. So I think that's one of the thoughts on that. There's another question around diversification vis-a-vis localization. As Professor Jack said, the answer is quite clear. You need to bring in high-end talent into the country to support some of the changes which are happening. Plus, I think there also needs to be a change in the work style and environment. The work style environment in GCC is quite hierarchical in nature, and which means that most organization layers have zero or possibly negative decision-making powers. The entire work culture has to be changed, where there is empowerment amongst every layer, so that each layer of the human resource becomes more productive. If that happens, then you may not have to localize. It'll automatically result in a better manpower, localization strength. I think the third point on this is, with the privatization initiative which governments have taken, it's extremely important that they hold back the expats, because for the first few years, the private sector can only grow when there is a combination of local strength being built and the gap being fulfilled by the expats. Once that base framework is ready over the next few years, then, as Professor Jack said, there could be a shift in how the labor framework is made.
Right, thank you very much. In what you've heard this afternoon, perhaps you don't know where things are actually going, or even where they should go, but hopefully we have all learned something about what the parameters are within which one needs to think about this and then reach one's own conclusions. I'm sorry that some of the contact has been a bit difficult, both in terms of the light and in terms of the sound, but hopefully enough has come across in both directions. So I know that you're waiting for us to move on from here, but first, thank you very much for the speakers. Okay.
Thank you, Professor Tim, and thank you for the panelists for their great contribution. I think we have heard the word of competitiveness, capacity building, foreign direct investment, reasonable oil prices or energy prices, diversification. It's great to have a long-term plan, and it's great to have something, the people can look forward to that. But I think we should all not forget that the human being should be the main focus in these development plans. If you have a great human capacity that are well-trained, they are the one who can really contribute to the future economics plan. Thank you very much, and I would like to invite you all quickly, because we have a group photo, and we would try to do it before any drop of rains destroy your hairstyle. So we're going to walk this way to the King's College area. Please follow us, and then immediately we'll move to dinner. Thank you very much.